it's usually a spiral, and then 6 months later, 12 months later, the hole's a lot bigger and they haven't been able to get out of it at all. So there's a lot of karma and shame with debt. And I think people need to get over that. I've said many times, we need to try and make debt sexy, and then we can start talking about it, because there's no shame in it. Everyone's got it, in one form or another. Student loan, mortgage, house loan. You're very lucky if you don't have any of those. Those people who are in debt don't ask to be in debt. Life throws curveballs at them, and anyone at any one time can be in debt.
Hello and welcome to another episode of Ways to Wealth. Today I'm joined by Christine. Christine, why don't you give us the TLDR on who you are and what you get up to on a day-to-day basis?
Kia ora, Charlie, and thank you for the opportunity to talk on your podcast this morning. So I'm Christine Liggins. I'm co-founder and CEO of the DebtFix Foundation. We founded DebtFix in 2018 as we saw a gap in the building financial capability sector with a loss of funding at that time for the sector, which we've just gone through again in 2024. DebtFix Foundation is a hardship and debt solution charity, and we try and help people manage their debts in a sustainable, realistic and non-judgmental manner.
Okay, yeah. Okay, that's concise. We've done that before. What gets someone to start a charity in this space? Like what?
So in 2018, we actually started it as a company, and our intention was to be a social enterprise. And back in 2018, whilst we were battling social enterprise and how we operate a social enterprise, New Zealand wasn't really ready for a social enterprise. They didn't really understand what it meant or how they operated or what they did. So we were struggling to get buy-in from philanthropies and, charity giving and things like that. So after a few years, we then converted to a charity in 2022. Now, looking back, I'd go, don't start a charity. It's not a good thing to start a charity, because just because you're constantly asking for money, unless you've got like millions of dollars in the bank, or a charity where you can make money. Obviously, we're not about making profit, but you can still sell some product or service to gain money, and we do a little bit of that, but we don't do enough. Now, prior to COVID, our numbers and our revenue building were actually going really well. And then COVID hit, and we had to really sort of step back and consider how we were going to fund ourselves, if you like. We were very lucky in the COVID first year that we got a contract from the government to do debt solutions. That gave us $500,000 a year for the next 4 years. And unfortunately, in 2024, they decided that the COVID budget had gone and, we don't need any funding now. It's like, okay, our numbers have tripled, but okay, let's go without the $500,000 now. So starting a charity is very hard. You've got to get a good board of directors is always key to running a charity. And I've stumbled with this over the years by, picking nice people, but not picking people who maybe understand how a charity actually works and operates, and that they are a not-for-profit, and that they have to do things in line with charitable objectives rather than making money. And some directors, I think, struggle with that concept, and they think that you've always got to make money. And they also have to be passionate about the sector you're in and have some knowledge of the sector you're in. I think people go on boards of charities because they think they're doing good. Oh, I want to do good, so let me go on a charitable board. And it's like, yeah, you've got to actually have some knowledge about that sector. That's my thought. That's where I've fallen down. Luckily, right now I've got a fantastic board. We are always looking for new board members. But yeah, the board is key to the happiness of the CEO.
Yeah, for sure. For sure. And like, what experience did you have that led you to creating it? Like, or what personal experience led to the kind of motivation to actually create anything, right? Just no matter what it's structured as, it's still a living, breathing thing that helps about 3,000 people a year. Is that right?
Oh, currently 8,000.
Yeah, that's a
Currently
lot.
8,000 families a year we're working with. So we're a small and mighty team. So I came to New Zealand back in 2004, and I started working with the local budget service. And I get very involved, and I get very bolshy, is for want of a better word. So I always looked for better solutions for my clients. How can we better help our clients for better outcomes? And I, back in the early 2000s, I was vehemently against bankruptcy. If you Google my name, you'll see several news articles where I've said, bankruptcy is a weapon of mass destruction, and it's not fit for purpose anymore. And I still believe that. So I looked for other ways that people could repay their debts rather than go bankrupt, and it basically ruined their life and changed their life, because bankruptcy is life changing and it affects people's lives in so many different ways for so much longer than they expect. So I looked for other alternatives because contrary to popular opinion, those people who are in debt don't ask to be in debt, or they don't ask to be in unmanageable debt. Life throws curveballs at them, and anyone at any one time can be in debt. Some of us are lucky enough to have a backup, savings in the bank, or the ability to sell a house and go renting. However, in the current climate, rental prices are probably more than mortgages in some areas, and rentals are quite hard to get. I think COVID also taught a lot of the population that, debt could happen to anyone, because in COVID, if we remember the COVID year, 2020, a lot of people dropped wages down to 80%. And for a lot of them, that was not enough to clear the debts as well as pay the bills and things. And then what we had was rents had already started to rise pre-COVID. And then COVID year we had, because it's been going on that long, we had the Ukraine war, which affected petrol prices. We had the cost of living crisis and the supply and demand. So caused everything to go up. So we're constantly in that 80%, because we've never regained that amount. And that could happen to anyone. And you just need to take a deep breath and get some good advice on how you can now manage your debts. Separations, loss of jobs, everyday occurrences put some people in debt. And those people want to pay off the debt. Then they didn't go into debt thinking, I'll just get it written off because can't be bothered. They actually do want to pay off the debts. So giving them options through DebtFix to pay off the debts gives them some stability back in their lives to help build better resilience for the future.
And but I guess typically once you get involved with a family or DebtFix does, the family's been in debt maybe for a while already.
Yeah, it's usually a spiral, and they start off thinking, oh, I'm struggling a little bit, and they try and get themselves out of it, maybe taking on more debt, which is never a good thing, but always thinking that it'll work itself out. And then, 6 months later, 12 months later, the hole's a lot bigger, and they haven't been able to get out of it at all. So, yeah, dealing with issues sooner rather than later, rather than thinking it'll be all right next week, is better, to try and get on top of it and reach out for help, because I don't think people, there's a lot of fakama and shame with debt, and I think people need to get over that. I've said many times we need to try and make debt sexy, and then we can start talking about it, because there's no shame in it. Everyone's got it. In one form or another, student loan, mortgage, house loan. You're very lucky if you don't have any of those. So I think we just need to start talking more about debt so that it makes people more aware that there are options if they start to struggle.
Yeah, I mean, from what we've seen, I guess, typically in the last few years, especially the people that have struggled most have been consuming the most financial products, typically in the form of debt, but also quite high consumers of different products like different insurances and protections there. And it's kind of, we think of debt as, owing, but it's also what's our liability base?
Yeah.
How are we getting? Is it an insurmountable amount of debt that's really hurting us, or is it also this large ongoing bleed, right? Which is really the kind of thing that gets you over time, and that's how these holes get bigger, right? One thing I found was interesting is it seemingly higher earning people from what we've seen often have more debt, more of this liability kind of wall that is really hard to come out from if you lose momentum on your earnings, because it's typically a mismatch, right, of earnings and income that catches you. And we think about this a lot in startups, in the startup game around runway, right? What is our runway for our next milestone, or until we're profitable, or et cetera, et cetera, et cetera. And the software that we've spent time building is actually kind of taking more of a, what is your personal finances look like if you actually made them more like a company, like your balance sheet, your income statement, what are these obligations over time? And what would you say is the biggest mover of a change, I guess, or what's the biggest kind of, from what you see, what's the kind of lowest hanging fruit that people can get a little bit of confidence? Because I think that, what I found years and years and years ago when I started getting into Dave Ramsey is that once I started to pick up momentum, then things changed actually quite seemingly quickly, but takes a while.
Yeah. And I think our perception of life is that it'll never happen to us, and we'll start saving tomorrow. and I think we need to actually build that into our, when we do a budget with someone, we're building savings into that budget, because we need to be making plans right now for tomorrow, because if we leave it till tomorrow will happen and we'll have nothing. So I think we just a little bit every week away. And some of your readers might be thinking, oh, she's only talking to beneficiaries and things like that. No, I'm not. I deal with a lot of self-employed people, business owners who've started up and then things have gone awry. Our actual client is usually middle to high income, so not low or benefit. So we are looking at that, and then average debt per our client is about 80,000, and that's retail debt, so credit cards, buy now, pay later, and personal loan.
Average.
That's not.
Yeah, so you've got to be earning a lot of money to get access to that sort of consumer debt, right?
And that's exactly right. And going back to where you are, the better income earners have got more debt, but they, I guess, felt more secure in their job. Look at what happened in the last couple of years when all the public servants lost their jobs and they thought they were in it for life, and they thought they had a secure job. And then suddenly a new government says, oh, no, we're going to cut all these costs and get rid of all these people. And what was a secure job is now, I'm now out of work and I've not started because I was going to start tomorrow, started saving. So I think it's always have a backup plan. And you mentioned about insurance, and I personally had income protection, and I thought, shit, that's costing me a lot of money. What can I do instead? And also, what is the likelihood of X happening so that I need this money? And they always say in the books, have at least 3 months backup if you can, and that's sometimes hard to achieve, but start putting away some money each week, and then you can build that up. It is the loss of what once a secure job, but also a relationship breakdown. We all think that we're going to be, when we start off on our relationships, we all think we're going to be in it for life, and it's all, where nothing will happen. We're truly in love with each other, and everything in the garden's rosy, until it's not. And then suddenly you might have taken on debt together. One person might have taken on all the couple's debt. And now you're stuck with it because it's all in your name. And that wasn't your fault. Well, unless you were naughty. But anyway, that wasn't your fault. So we've always, what we're not very good at is planning for tomorrow. We think that we can plan tomorrow later, and we need to be planning now. So I think we are, it's very much let's get it now and worry about it, later. Buy now, pay later. That's why they coined the phrase there. But we actually need to try and go back to what it was like in the probably 70s before the credit crunch came, and see if we can actually delay buying something and think about it. Do we actually need it, But it's a consumer society, and we can have whatever we want right now. It'll just cost us in the long run.
Yeah, it's definitely human nature to not want to plan for the future sometimes, unless you really have a vision for what you want to achieve. And I think that when things get tough and stressful, you're kind of just in survival mode, and then you're kind of more likely to put your head in the sand and just cope. And then obviously if you have a good picture of where you're at, even if that picture is not very pretty in the beginning, like I think that seems to be a really good way in which you can kind of really gain some confidence, because then you know what's true, rather than kind of knowing it's an issue but kind of being busy. Because it's often, I'll work harder, you'll do more stuff, and often then that leads to crutches and leaning on crutches to deal with the stress. And that may take the cost of that. There's probably a cost associated with that, and then obviously, it becomes self-fulfilling.
A couple of years ago, Mental Health Foundation put out a report that said the number one cause of mental health issues was finances. And it's because we bury our head in the sand. It's because we don't plan. It's because it'll never happen to us sort of attitude. And also what we're very good at it in New Zealand is saying, start up a business, and the fantasy of having your own business and being your own boss and earning loads of money doesn't happen very often. All these business owners who they've struggled for the first 5 years before they've even made the first dime, So it is hard work out there. But a lot of people, like I said, a lot of our clients are self-employed or they're business owners, and they don't understand the business side of it. They're very good at actually doing the work, the mahi, the job that they're doing, but understanding how the business works. And I'm not just talking taxes and GST, but actually making records of this and knowing whether it's making a profit or not. We see a lot of people, even with limited companies, because they thought that was the right thing to do, which, I mean, that's my preference, do a limited company rather than a sole trader. But it's each to their own, and get your own advice on that. But they set up this limited company, and then they have all their business money going into their personal bank account. And they can't separate business and personal out, and it's all just mashed together. And then they come to us and they go, oh, I owe like 400 grand's worth of debt. And then we go, well, hang on a minute, whose debt actually is it? You know, and it's they don't actually realise that, no, that's business debt, that's personal debt. So actually you only owe 20,000, which makes it look a lot better. I had a guy who had a couple of franchises, and it was a pizza franchise. I can't remember which one, but you know, there's not that many. And he said, you know, I owe all this money, and I went, no, you don't. That business owes that much. That business owes that much, and you only owe this much. You know, and we check personal guarantees on loan contracts and things like that, on what was signed up for and what they're actually liable for. But people, the knowledge of that, and unfortunately the teaching and the learning about how to run a company is not something that people...
Well, it's not there. It's not actually there.
It's not there. It's not there, and it's not something that people think, oh, I want to start a business. Oh, I'll go on this course first. You know, it's like, no, I just want to get doing. I want to get working, and which is great. But
well, I think, I think in that regard, it's about one of our key principles, and you should use it in life, right? Is live to trade another day, and that doesn't mean trading as in trading equities or anything specific. It's a trade as in continue to play the game, as in stay away from bankruptcy, as an example, right? Like, your ability to continue to play the game is important, and that's why you know, the risk. One thing we saw was a founder who had taken a personal loan to give themselves a year or a bit of runway to basically still spend and live the way they were living, but obviously build the startup. And that's just the worst kind of approach, because that has interest on it. Even though it's quite friendly personal interest, it's still interest. And you're basically putting yourself in a situation where you can be taken out of the game. And that's what debt does, is it basically puts your life in the hands of your debtors, and kind of makes you forced to make other certain actions, right? So I think it's like, it doesn't matter about starting a business necessarily. It's like being really intentional about the level of liability you put on yourself and your business in the early days. It's like, just take small bites at the apple. You don't need to go and get the whole apple and get it on tick kind of thing, you know, especially these days where the cost of production is going lower. Mm-hmm. Mm-hmm. For the individual, if they want.
And also, when you start up a business, I know with DebtFix, you know, we started up, this is what we're going to do. And it's not that we changed our co-popper. We tweaked it to suit the needs. You know, like, we're operating differently now than we were before COVID. You know, in fact, I'm operating differently now than I was in 2024. In 2024, we had an office with 20 people in it. And now we all work from home, and I'm probably back up to 20 people, but we're all over the country, and we've adapted, and you have to adapt as well. And I think, you know, my advice to anyone going into business or even managing their own personal money is, the first thing you need to know is, how much is it costing you to live? And that's writing everything down in your household, the power, the rate, the rent, the mortgage, the food, the car running costs, the insurances. How much do you actually need just to make your household survive. And it's the same with the business, because you get self-employed people working lots and lots of hours, and they're thinking, I'm not bringing home much money. And it's like, because you might not have your hourly rate set correctly, so your charge out rate correct, because you haven't incorporated all these extra costs that you've got, including your time. So we do have to understand all the costs that are needed to be covered, and then we can then work out, right, what do we need to cover that, and how can I get that income to cover that amount?
Yeah, for sure. For sure. I mean, that's definitely agree with that for sure. And what does success look like for you in the next 5 years with DebtFix and with everything you're trying to do? Is there anything you're working on? Anything, wave a magic wand and 5 years in the future, and some, there's a.
I will have money in the bank, I'll tell you. So we're trying to be sustainably funded. We aren't. I'm living from month to month to make sure that my staff are paid. It's very hard to get money from philanthropy or businesses. So we are working on that. We work with some KiwiSaver providers on their hardship withdrawal process. And obviously that's a service agreement, so that brings us money in. We are developing this year a fabulous new software system for hardship, which will put us ahead of the game in all hardship aspects. That will enable us to go out to to more KiwiSaver providers to get them on board, because we do a great service to their members. But by 5 years, we also aim to have a business debt helpline and more help for businesses who are struggling with debts. At the moment, we focus on personal with a touch of business, because I can obviously answer those questions. But, in 5 years' time, we aim to have an actual helpline for businesses, for debt businesses, and also some education around that too. So those are our long-term goals. Yeah.
That's cool. And what do you think your biggest challenge is? Is it funding? Is it a model that works, and a regime that works and allows you to be sustainable? Is it that there aren't enough discretionary funders that are coming in and stepping in? Because there's lots of KiwiSavers out there that are making lots and lots of fees. How many KiwiSaver founders are on the board? None?
No, we don't have any, actually, no. We are trying to get more KiwiSavers providers involved, and we're also working for changes in government policy for that. We're working with the government to try and change policy on KiwiSaver withdrawals. Our biggest risk is funding, and it always has been since COVID. It's been funding, especially since we lost the government contract a couple of years ago. $500,000 is a lot to replace. We are fortunate with some funders to support us. We've never run dry yet. Very good budgeters, as you'd expect. And I think I'm quite entrepreneurial, so I'm always looking at how we can work smarter, not harder, how we can be more efficient and more effective. So we're always looking for those ways, and our new software will feature a lot of AI, but forensic AI and logic, and make it easier, not just for us working in this space, but also the people who are in hardship, where we're trying to make it easier for them to engage as well. So we're trying to make the journey a lot better. So it is all down to money, because I need to keep my staff paid. I don't see why they should be volunteers. I want good standard. I want good quality work from them. And they go through a lot of abuse, truthfully, by trying to help people. So they need to put food on their own tables as well. So it is funding. But it's also, a couple of extra people on the board. That's always useful, who can help move things forward and bring some new ideas to the table as well.
Yeah, interesting stuff. Funny, not funny, but yeah, an interesting dynamic, right? How do you grow though? Like, you've got grown a lot, so there's obviously a lot of hardship out there, and people need help. People want help. They want a response from something when they're feeling at their lowest. How do people find you?
Look, we try. We don't need people to find us. They already do. A couple of years ago, we were doing 2,500 people. Now we're doing 8,000 people. What I'm looking at doing is setting up sort of like hardship hubs around the country, and so that they can call into places face-to-face if they need, but also so that we've got the local reach and the local knowledge of what's available in the community as well. So setting up hardship hubs across the regions will help us expand. I don't want to be a charity who is employing hundreds of people, because that makes us more vulnerable, because we need more money to support them.
Yeah.
So it's all about...
you need to scale.
Yeah, it's all about how can we scale up, but not at a huge cost. There's a lot of good budget services out there, and we can partner with them. We can give them some money to help support them, but we're not taking on all the burden ourselves. So we're looking at partnerships like that as well, and how we can grow without expanding our liability on our workforce, because I've got to watch that too.
Yeah, for sure.
Yeah.
Right. Because at the end of the day, there's no difference between you and a business or a person's finances, right?
That's exactly right.
We pretend that it's different. Government's different. Government shouldn't be different. Government is the same thing. It's the same principles. It's just a different structure.
Yeah.
And those structures are supposed to be there to benefit that entity for what it is, right? And that's why charities have certain benefits, et cetera, for a reason.
Yeah.
Because they're not for profit.
You still have to get the income in to cover the costs.
Yeah, exactly. We're all spending. Yeah. But it's really great that you've managed to get such a strong uptick, and scale to 8,000 is good to deliver that, because it's not just about finding those people, it's delivering. So it's really great that you guys have been able to just go ahead and deliver such great value to so many people. It doesn't surprise me at all that a lot of business owners and sole traders, because New Zealand is a very service-heavy, sole trader-driven industry economy. Outside of kind of property and finance and the public sector, it's very service-dominated. And I think that, that's obviously kind of why a lot of your clients or stuff end up as those as those sort of demographics of people. I guess it will be great to see how you can kind of find ways to reach more people without having to put more people in. And I think that it will be interesting to see, how many more businesses can actually start up in a sustainable way and get to a point of exportation of a product or service that isn't connected to ours. That's something that the kind of country and it's a very dynamic economy actually, but small, however, also driven by services in many ways. So it'll be really interesting to see how that kind of dynamic shifts over the next 10 years, and can we find great ways that are able to be exported and not driven by services, because services are so cyclical with the demand of whatever is going on at that point in time. And we kind of saw an unsustainable period of time post-COVID where there was just a lot of services, and it was kind of the extreme of that moment in time. And now we've kind of got the hangover of that, I think. So hopefully we can get through it, but it's about knowing your numbers first. I think that's the main thing, right? Is knowing what's going on, because knowledge is power.
Yes.
And
And that's exactly right. Getting more knowledge, even, of debt solutions and hardship provisions, getting that knowledge out there is one of our goals as well, because people don't know what they don't know. And when COVID did hit, people didn't realize that actually you can just speak to your creditor and say, I'm struggling, and they are duty bound to help you, And a lot of people didn't realize that was an option. And it's just simple things like that,
Transparent, right? A problem shared is a problem halved.
Yeah, absolutely.
And with someone that you owe money to, that's the thing.
Yeah.
Is, hey, this is the situation. Here's the roadmap to get back. And I think that's something that Dave Ramsey's approach with the baby steps and how he kind of teaches online is really helpful, because he does force although it's a bit brash, a very pragmatic step-by-step approach of like how to snowball progress. So I think what they've done is really interesting. That software isn't available here, I know, anyway. But I think the approach of just taking it step by step and knowing, and then communicating, that's a really good one too, because I think that people don't often think about that as well. So that's really great advice. So thank you so much for taking the time today, Christine. I've really enjoyed to hear about your work, and I'm super excited that you've grown it to 8,000 households a year, and I have no doubt that you'll double it again.
Yes, unfortunately, yes, we'll probably easily double it again in a couple of years. So it's not getting any easier out there. I can't see this year changing. 2026, I don't think we'll get the fix that we're promised. But maybe in 27, it might start looking a little bit better.
Yeah, that's right. I mean, hopefully at an individual level, we can find ways to kind of reduce that wall of that burden and kind of continue to make small bites at the apple and kind of improve our situation.
Absolutely. Yeah. Thank you for your time. Thank you.